Hello traders, welcome back to the channel. It's Robert here. Listen, we are talking today about lucid trading. Listen, everybody's talking about this right now because obviously they have the most incredible payout rate where they're paying traders with an average payout time of 15 minutes. Now, that's like incredible. It's unprecedented. But I did promise you guys I would come back on here and talk about some of these rules together. So let's do that together. What I want to do is just go ahead here on the website. We're going to go ahead and just grab down this facts section, and we're going to go through these articles together one by one so that we can just learn about what's going on here and get my opinion on it and get you guys going in the right path here so that we can find out some of these things together. So the first thing here is the general information, right? We're just going to start here in this section and we're going to go one by one and we're going to read some of these articles together so we can find out what's going on. So let's start with this one. What is Lucid Trading? So Lucid Trading is a funded firm that helps traders practice strategies and improve risk management. By offering access to capital to trade in live markets, Lucid Trading allows traders to grow while taking on less personal financial risk. So our mission, Lucid Trading was created to bridge the gap between modern funded firms and traditional proprietary trading desks. We believe that funded firms are an excellent entry point for new traders, but when a trader is ready for live markets, they deserve professional level support. Our mission is to offer a clear, step-by-step path for traders to move from evaluation to live trading, supported by experienced professionals and a structure modeled after prop trading desks. Okay, so let's see what we promise. We are committed to setting a higher standard in the funded trading industry. Here's what every trader can expect from Lucid Trading. All trading rules are clearly defined with no ambiguity. Our customer support is responsive and dedicated to helping you succeed. We are setting a new standard for what it means to support traders who are ready to go live with real capital. The space is long overdue for some change. Firms need to get back to actually funding traders who are ready for the next phase of their journey. Traders can count on Lucid Trading. Okay, great. That's the first article. Let's go back to general information. What platforms are supported? Okay, so they have the Project X platforms. We can look at this section here together. This is the Project X platforms are Lucid X, which is the one that's proprietary to this particular prop firm, Lucid, and then Quant Tower, which is also a Lucid partner. And below that, we have CQG, and that includes Ninja Trader, and we've got Tradeovate, and we've got TradingView. Okay, perfect. Now we know. And then also, we have the majority of all the Rhythmic platforms too, and that includes things like MotiveWave, Quant Tower, Sierra Chart, we've got Jigsaw, we've got Bookmap, we've got Addis, and then we have the RTrader Pro, which is the official Rhythmic platform, and then also multi-charts. So all of those platforms are supported here, and you can trade with any one of those. Okay, let's go back now. Approved products and commissions. So there was a little bit of misconception about this online, at least for me there was, but they do offer the equity indices, which we have, ES, we've got MES, we've got NQ, MNQ, RTY, the M2K, which is the Micro Russell. We've got the NKD, which is Nikkei. We also have the YM, which is the Dow Futures. And we have the Micro Dow. And then we have a whole bunch of different currency as well. The Australian dollar, British pound, Canadian dollar, Euro FX, Japanese yen, Swiss franc, the New Zealand dollar. Then we got crude. We have micro crude. We have the mini crude oil, and then we have E-mini natural gas futures. We also have the Henry Hub natural gas futures. We've got platinum, we've got copper, gold, micro gold, silver. Then we have some of the lean hogs, lean cattle, the live cattle rather, lean hog, live cattle, soybean futures, corn futures, soybean oil futures, soybean meal futures, and the Chicago wheat. So we have a really solid mixture of all different types of futures that we can trade. I personally trade on this channel the equity indices, the equity index futures. but they also have a pretty decent mix here. You can trade energy, you can trade metals, you can trade softs. There's the ag products also. There's a lot going on here, and it all looks really good. So how many accounts can I have? Lucid Trading offers several account types, each designed to support a different phase of the trader's journey. Below are the rules and limitations associated with each account type. So we have the account limit, and there's up to 10 active Lucid Test accounts per household. And then the shared limit. Households may not exceed a maximum of 10 accounts in total across Lucid Test, Lucid Pro, and Lucid Direct. So, example, if you have 5 Lucid Pro accounts, you may only hold 5 Lucid Test accounts. 5 plus 5 equals 10. Then the reserve limit is you may keep 5 Lucid Test accounts in reserve while you have 5 funded accounts. So again, 5 plus 5 equals 10, right? And then you may trade Lucid Test accounts while they are in reserve. Test accounts contribute to the overall 10 account limit across all account types, including Lucid Pro and Lucid Direct. So let's look a little more closely right now at Lucid Pro. Now in Lucid Pro, the account limit, you have up to 5 active Lucid Pro accounts per household. Shared limit, Lucid Pro and Lucid Direct accounts combined may not exceed 5 accounts total. Example, if you have 3 Lucid Direct accounts, and you may only maintain 2 Lucid Pro accounts. Example, you may own 2 Lucid Pro accounts and 3 Lucid Direct accounts, totaling the 5 account limit. Okay, so Lucid Direct, same thing. Your account limit is up to 5 active Lucid Direct accounts per household. And then the shared limit is the same. It's as with Lucid Pro, the total combined limit between Lucid Pro and Lucid Direct is 5 accounts. So if your example here, if you hold 3 Lucid Direct accounts, then you can only have 2 Lucid Pro accounts to stay within the combined limit. Perfect, understood. All right, then Lucid Live. Now each household may hold 1 Lucid Live account, and then Lucid Escrow, the same thing, the account limit. Each household may hold only 1 Lucid Escrow account. So once you get moved up to live funding and you're trading with real capital, you have 1 account and that's it. But before that, you can have up to 5 funded accounts, and you can have up to a total of 10 accounts. So 5 funded accounts, 5 test accounts, or 10 test accounts. You can't have any combination of Lucid Pro and Lucid Direct. It has to be 5 or less. So we got it. All right, so let's move to the next thing. How about how do fees work? So there's a one-time fee. Lucid Test and Lucid Direct accounts are purchased by paying a one-time fee. There is no subscription, there is no automatic rebilling, and since there is no monthly billing cycle, you will need to purchase a reset if you wish to restart your Lucid Test. Resets are not automatic or free. So there's no activation fees. There's no activation fee to upgrade to a Lucid Test to a Lucid Pro. And then the account resets. If a trader fails a Lucid Test account, they may purchase a reset from the trader dashboard. A reset returns the account to its original starting conditions, including balance and risk parameters. Okay, cool. So which is super nice because there's no subscription fee. It's really, really cool. Let's see here. Can I trade as a business entity? Signing up as a business, and you may register a Lucid trading account using either personal or business information. To sign up under a business name, enter your business name into both the first name and the last name fields during registration. Business verification requirements. If you register as a business, you must get paid out as a business. To receive payouts to a business, you must submit the following documents to complete the business verification process. First thing is the proof of incorporation, which is the articles of incorporation, certificate of formation, etc. A proof of ownership, which is an operating agreement, a shareholder agreement, etc. Government issued photo ID, required for each individual who owns 25% or more of the business. And once your documentation is reviewed and verified, payouts can be issued directly to the business entity. Okay. And then the last section here in this general information is restricted countries. So, and this is a list of the countries that are restricted where you're not able to use Lucid Trading as you're not allowed to trade with Lucid Trading if you live or reside in one of these countries. And you can go onto the website and sort of review this at your own leisure. Don't use a VPN and do all that stuff. Don't try to break the rules here, because if you get caught, you're going to forfeit all your earnings, and that's no good. So then let's go to the next section. Let's talk about the trading rules. Now, there's 9 articles in here, and these are the rules that are pertaining to Lucid Trading. So the first one is trade with integrity. This is the first article here. And let's take a look together. Our philosophy. At Lucid Trading, integrity is the cornerstone of every trader's journey. We believe that ethical trading practices are essential for building long-term success, both for the individual trader and for the firm as a whole. Our rules are intentionally designed to support traders who approach the markets with discipline, transparency, and professionalism. Our focus is not on short-term wins, but on helping traders build sustainable, career-oriented success in the futures markets. The partnership based on trust. Lucid Trading operates on a foundation of mutual benefit. We provide traders with access to capital, technology, and support. Traders bring their strategies, discipline, and risk management to the platform. This balance only works when both sides act in good faith. Our expectation is that all traders operate with the same level of honesty and clarity that we bring to the relationship. Traders are rewarded not for exploiting technicalities, but for demonstrating real competence and consistency. What we prohibit. To preserve a fair and competitive trading environment, Lucid Trading strictly prohibits the use of strategies that exploit platform mechanics or simulated market conditions. The following are examples of prohibited behavior. Taking advantage of system errors or update delays. Exploiting discrepancies in simulated prices. Using tactics that do not reflect real-world trading conditions. These behaviors violate the spirit of the program and undermine the integrity of the trading ecosystem we are building. Our rules are clear. All traders are expected to uphold the same standards that define professional and sustainable trading. Commitment to ethical growth. By maintaining these ethical standards, we ensure that Lucid Trading remains a place where traders are evaluated on skill and discipline, the platform evolves in alignment with professional industry standards, and long-term partnerships are built on trust and performance. We're here to help fund real traders, not opportunists, and we're committed to creating a space where real traders can succeed. Cool. Okay, let's go to the next article, which is the max loss limit and the end-of-day drawdown. Okay, what is it? The max loss limit, MLL, is the maximum amount a trader can lose before their account is closed. At Lucid Trading, we use a end-of-day drawdown, EOD drawdown, system to calculate MLL, which is based on the account's highest closing balance rather than intraday fluctuations. I can't tell you how happy this makes me. They're not the only firm that does this. There are other prop firms that do this, but I really like the fact that this exists in Lucid Trading. So this approach provides a more trader-friendly experience by focusing on realized performance rather than penalizing temporary gains. Here's how it works in Lucid Test and Lucid Pro. In both Lucid Test and Lucid Pro accounts, at the end of each trading session, the system calculates the highest closing balance. The MLL increases as your balance grows up to a defined point. Once your account exceeds the initial trail balance, the MLL locks and no longer moves. The first thing that we have is an account size that has $50,000, right? So the $50,000 account has an MLL amount, which is a max loss limit of $2,000, which means that the initial trail balance will be $52,100, which is what you would have to get to in terms of your balance in order to get your locked MLL balance. So what that means is, let's say you have $50,000, right? And then you trade up and you get your balance up to $52,100. Well, now the trailing stops and the locked MLL balance is $50,100. Perfect. That means that you can trade and make money and lose money above that point. And as long as you don't go below $50,100, your account will remain open. Awesome. So the next one is the $100,000 account, right? And it has a max loss limit of $3,000. And it's the same kind of structure. You can see it right here, 103,100. And then the locked MLL balance will be 100,100. Perfect. Same thing here. Now we have the 150,000 and the MLL amount is $4,500. The initial trail balance is 154,600 and the locked MLL balance is 150,100. Okay, got it. So if I can get my balance up to 154,600, my locked MLL balance will be 150,100. If this is confusing to you, please leave a comment down below and I will create more videos around this topic so that you can understand more. Let's see. So how does it work in Lucid Direct? So Lucid Direct uses the same end-of-day drawdown method as both Lucid Test and Lucid Pro. So remember, Lucid Test is the evaluation. You trade up the evaluation, you hit the profit target, then you move into Lucid Pro, which is simulated funded. Now this one, the Lucid Direct is different. This is straight to funded. So this is the straight to funded account, and you can review my other video where I talked a little bit about the difference between the test account and this one and the Lucid Direct account. And you can see what the differences are. But so in the straight to funded one, which is a little more expensive, but you go straight into a funded account, you don't have to do any testing. So let's see what the difference is here. So Lucid Direct uses the same end of day drawdown method as Lucid Test and Lucid Pro. The only difference is the MLL values and trail balances for applicable account sizes. So let's take a look here. Now, in Lucid Direct, we have the account size of $50,000 with a max loss limit of $2,000. The initial trail balance is $52,100 and the locked MLL balance is $50,100. That's actually the same, as far as I can tell, as the $50,000 account in the Test and Pro. Now, there is a difference in the $150,000 account because the maximum loss limit is $6,000, which means the initial trail balance will be $156,100, which will lock the balance then at $150,100. So the key difference is this amount right here, which is the $6,000 that is, we're talking about right here, right? We got $6,000 for the $150,000 account, the max loss limit, which means that the initial trail balance, obviously it's going to go higher. It's going to go to 156,100 instead of 154,600 because the max loss limit is so much bigger, right? And then, but then we wind up with the same locked MLL balance. These two things are the same. So as with the other account types, the MML rises with your closing balance until it reaches the trail. And then once the account exceeds the trail, the MLL locks at the initial balance plus $100. This is standard across many prop firms use the same structure. This is the same structure that they more or less use at Apex 2 with the trailing drawdown, except this is calculated off the end of the day instead of your high water mark intraday, meaning you're a lot less likely to blow up, and it means that you can add to winners and run bigger positions and hold swing positions throughout the session if you want to, without the risk of blowing up so much. So as with the other account types, the MML rises with your closing balance until it reaches the trail. And then once the account exceeds the trail, the MML locks and the initial balance plus $100. So why do we use it? Question. The max loss limit gives traders a clear boundary for risk. The end-of-day drawdown method was chosen because it rewards actual gains instead of punishing unrealized profit, and it avoids premature liquidation due to intraday volatility. Wonderful. It's widely considered the most trader-friendly drawdown calculation method available. And at Lucid Trading, we believe in helping traders build sustainable careers, and that starts with fair and transparent risk parameters. And I truly believe that. You know, this is the intraday trailing drawdown, which is not what they use, is very unclear and ambiguous. and it causes people to blow up because they didn't understand how it works. They don't make any effort to explain to you how it works. You have to really dig in there and find out. This is much more clear. I really like this. I think this is way better. It's way better. Trust me, I've been doing this for years. I've been funded with different companies. You know, there's been a lot of money that I've spent on evaluations, on different prop firms, and this is the best way. This is the best way. These are the best rules for sure for the max loss limit and the end of day drawdown for sure. Okay, so let's go into the next article. This is daily loss limit. So the daily loss limit is the maximum amount that a trader can lose in a single day before trading is restricted until the next session. So that's really important to listen to. That doesn't mean you fail. You don't blow up the account. It says until trading is restricted until the next session, which is what is normally referred to as a soft breach. And what that means is that you won't lose your account just because you hit this, but it will lock you out till the next day. So all DLLs that Lucid Trading are considered soft breaches, meaning the account remains valid as long as the max loss limit has not been reached. The Lucid Test accounts use a fixed DLL that does not change over time. Do 50,000, 100,000, 150,000, it doesn't matter. These are your fixed DLL amounts no matter what. And if you reach the DLL listed for your account size, you will be restricted from placing additional trades until the next trading session, provided your account has not been liquidated, meaning you didn't hit the max loss limit. And how this works in Lucid Pro. Lucid Pro accounts begin with the same fixed DLL values used in Lucid Test, as long as the balance remains below the initial trail balance. Okay, so it's the same thing, but once the account closes above the initial trail balance, the fixed DLL is replaced by the Lucid Scale DLL. So let's take a look at the Lucid Scale DLL formula. The highest end of day account profit times 60% equals the Lucid Scale DLL. So the Lucid Scale DLL increases as your account grows. It does not decrease, even if the account draws down. And this provides greater flexibility and reward for consistent profitability. So if your highest end of day profit is $4,000, then 4,000 times 60 times 0.60, which is 60%. So 4,000 times 0.6 equals 2,400. Your new DLL will be 2,400 until a higher end of day profit is achieved. So this is how it works in Lucid Pro. Now let's take a look here. If we move up to Lucid Direct. Now in Lucid Direct follows the same logic as Lucid Pro. Accounts start with a fixed DLL, which transitions to Lucid Scale after surpassing the initial trail balance. Once the balance closes above the trail, the Lucid Scale formula applies. Highest end of day account profit times 60% equals Lucid Scale DLL. As with Lucid Pro, the Lucid Scale DLL only grows and never resets downward. Why do we have it? The daily loss limit is designed to protect traders from catastrophic losses, encourage measured, sustainable performance, and offer traders room to grow by rewarding consistency and discipline. Our DLL structure promotes long-term success and reflects Lucid Trading's commitment to trader-friendly rules and risk management. Additionally, traders can tighten the DLL through the platform's risk settings, allowing for a greater personalization in line with their trading goals. Listen, I want to point that out so I've been doing this a long time, and I can read through this and I can understand right away immediately that the fact that the thing doesn't scale back down actually is an opportunity for you as a trader or me to blow their account. However, if you look right here at what they said, which is I think is very important. They do address this, and with experience, someone like me who has a lot of experience in this will show you that traders can tighten the DLL through the platform's risk settings, allowing for greater personalization in line with their trading goals. Why? What am I telling you? What I'm telling you is if you run your balance up really high and say you have $160,000 in balance and your fixed DLL has gotten big because you had a big day, and then you draw back down. You don't blow up your account, but you draw back down. Your scaling DLL is not going to change. That's your responsibility to go into your platform or you can do it mentally, but go into your platform and change your risk settings to make a smaller risk tolerance, right? So that you don't blow up your account. Because what happens is we get going, the account gets bigger, our head gets bigger, And the next thing you know, you draw down a little bit, and now you have that extra. It's almost like giving a dog a leash. And if you give it too much of a leash, it's going to take it. If you give them an inch and they take a mile, they're giving you a lot of rope to hang yourself. However, they do address that, and they do say that traders can tighten the DLL through the platform's risk settings, right? So what they're showing you here is a comparison of what it looks like with other popular prop firms. If you look at where your account balance is, so this would be your green line. Let's say that you were, the green line on top is your account balance, right? And you get all the way up here to 65,000. You're going up like this, whatever. Now, in a standard prop firm, and just a regular prop firm, especially one that has an intraday trailing drawdown, you'll be being followed like this, right? And firm A, this red line right here, that's the distance from you blowing up. If your line crosses this red line, you blow up, and then you lose your account. You don't get any payouts, right? So what they're showing you is that because they lock, and because they have this scaling dynamic loss limit thing going on, you have all this distance from where your balance is. If you trade up to this level, from where your balance is to where your trailing drawdown is, it's way down here, and you have all that room to either put on more risk or build a buffer or take some withdrawals so that you can make some money. And I think it's really great. This is something about this firm that's absolutely fantastic. And look, guys, I'm not just saying that because, oh, he's just an affiliate. And listen, I'm going to come on here and make videos that are an hour long and talk about all these things just because I'm trying to make money. That's not what I'm doing. I'm on here because I want to try to share some of like my experience and expertise in this area to help you to make a better decision about what prop firm you might be trading with, or what will work for you. This might not be exactly the right firm for you. You might want something with tighter risk management. I don't think so, but you might. In any case, also it might be a budget decision too. There's that. So let's go one more thing here now. We've done daily loss limit. Let's go into consistency percentage. All right, let's see what's up here. So the consistency percentage is a rule designed to ensure traders demonstrate steady, disciplined performance. It limits how much of a trader's total profit can come from a single trading day, which helps reduce reliance on risk or one-off trades and promotes repeatable strategies, right? Okay, how does it work? The consistency percentage is a requirement for payout eligibility in both Lucid Pro and Lucid Direct accounts, so the funded accounts. Each account type has its own threshold. So Lucid Pro, the consistency percentage is 35%. Now in Lucid Direct, the consistency percentage is 20%. So you use the following formula to calculate your current consistency percentage. The largest single day profit divided by total account profit equals the consistency percentage. If the result is at or below the threshold for your account type, you meet the consistency requirement for a payout. So example, you're trading a $50,000 Lucid Pro account. Your largest single day profit is $1,000. Your total account profit is $4,000. Now they made this pretty easy for us. So 1,000 divided by 4,000 equals 0.25, which is 25%. And since 25% is below the 35% requirement for Lucid Pro, you meet the consistency standard. If your percentage had been higher than 35%, you would need to continue trading to reduce the impact of the largest day. So why do we have it? Well, the consistency percentage exists to encourage traders to focus on sustainable, repeatable performance and to deter excessive risk-taking or all-in type trades. Basically, you can't YOLO. And by reinforcing a steady execution over time, the consistency percentage helps to create an environment that rewards professionalism over luck and discipline over gambling. I'm going to show you something here. We'll scroll back up and just talk about this super briefly. One of the reasons when you get a Lucid Direct account, which is straight to funded, you pay the extra fee and you go straight into a funded account. There's no test or evaluation or anything like that. So, which means that you can become eligible for payouts much more quickly, right? So let's take a look right here. On those accounts, on the direct accounts, the consistency is 20% right here. And then on the Lucid Pro accounts, which is the one where you pay one fee, the smaller fee, but you have to pass the test, and then you go into the Pro account, and then you have to hit your profit target again to be eligible for the payouts. It's 35%. Why are these numbers so different? Well, I'm going to tell you why. Because in Lucid Direct, where you no longer have to take a test, they're taking an additional level of risk because you're already funded by paying the extra fee. That means that your consistency percentage is lower. There's a trade-off for this. The lower the consistency percentage, the harder it is to do. 20% is relatively difficult. 35% is much more doable because it gives you more wiggle room. Look, it's very easy to go over a couple $100, or, you know, if you're trading anything above like a mini, or it's just a couple ticks, can be a few $100s and knock you out of the range. Some slippage could cause you to not be in this consistency range. So in my opinion, there is a lot to be said for the Lucid Test and then going into Lucid Pro, because this consistency percentage, it's almost twice as big. 20% to 40%, 20 to 35%. It's almost twice as big. And that's a pro tip for you right there. Microscalping refers to a trading tactic where a trader attempts to capture very small price movements using very large size within extremely short time frames, often just a few seconds. The goal is typically to exploit how simulated fills work rather than to execute a sustainable trading strategy. This is not the same as genuine scalping, which involves short-term trades without attempting to manipulate platform behavior. Genuine scalping is permitted as long as it reflects realistic market activity and order execution. So, what happens if I microscalp? Well, Lucid Trading uses automated systems to detect microscalping patterns. You will be flagged if more than 50% of your profits are generated from trades held for 5 seconds or less. And then the enforcement process is like this. Basically, if your account is flagged, Lucid will initiate a manual review to verify whether the behavior violates the company policies. If bad faith activity is confirmed, you will receive a written warning. And then if the flagged pattern of behavior continues after warning, all profits from the microscalping activity will be forfeited, and you may be permanently restricted from using Lucid's trading services. And traders may request an appeal if they believe their flagged activity was incorrectly identified. Okay, why is it prohibited? See, that's the question, right? Microscalping is not a valid or transferable strategy into the live market. Lucid Trading is committed to helping traders develop realistic, long-term strategies that are viable in professional trading environments. Allowing microscalping would undermine the integrity of the evaluation process, make it difficult to identify genuinely profitable traders, and then threatens the sustainability of the firm. So Lucid's trading mission is to support traders building durable careers, not to facilitate system gaming. So that's pretty much the reason why. Let's go on and move to the next section. Here's another prohibited act, is hedging. So what is it? All right, so hedging in this context refers to the use of multiple accounts to take opposing positions on the same trade. This tactic artificially reduces risk by ensuring one account profits regardless of the market's direction. It is a form of system manipulation, not genuine trading. Example, a trader goes long on one account and short on another. No matter which way the market moves, one account gains while the other loses, neutralizing overall risk and attempting to secure profits unfairly. Prohibited forms of hedging. Lucid strictly prohibits all forms of hedging, including but not limited to hedging across multiple accounts held by the same user, hedging between different users' accounts, hedging between different firms or funded platforms, or any other form of hedging designed to bypass risk management rules. So common questions. Can I go long X contract and short X contract? No, you cannot go long and short the same contract in the same account or in separate accounts. This is strictly prohibited. Can I go long X contract mini and short X contract micros? No, you cannot go long short the same contract, but one is micros and the other is mini in the same account or in separate accounts. This is strictly prohibited. It's the same thing. And then, can I go long X contract and short Y contract? Yes, you may do this in the same account. However, You cannot go long X contract, short Y contract in separate accounts with the intent of sacrificing one account to profit in another. That's what they're trying to avoid, right? So what happens if I hedge? Lucid has automated risk, and also I think it's really important to point this out. Like it says here, like Lucid has automated risk systems in place to detect hedging behavior. If your account is flagged on the first offense, you will receive a written warning, and all profits generated from hedging will be removed. And then on repeated offense, all involved accounts will be closed. Like that sucks. And remaining profits forfeited, and you will be permanently restricted from using the Lucid Trading services. You may submit an appeal if you believe the system has misidentified your activity. And guys, just don't do this. They're going to catch you. The computer's going to catch you. And the thing that really stinks about that, like it's prohibited. Lucid Trading is committed to funding skilled, consistent traders, not those exploiting structural loopholes. Hedging misrepresents a trader's actual risk and skill, undermines the evaluation process, and threatens the long-term sustainability of the firm. Allowing hedging would make it impossible to identify and reward legitimate trading performance. So that's the bottom line. Don't do this. Don't hedge. Don't do those things that you've seen on YouTube about how to pass evaluations using news events, and don't do this. They're going to catch you doing this, and then you're not going to be able to trade at all. So and the other thing too is that if you need a system, if you need to learn how to trade a system, look in my description. There's links down there for Trade Pro Academy. I have some discounts, some introduction to some futures courses, or get on Discord and message me directly, and I can put you in touch with education that will help you to learn how to do this right. Now, what else? Prohibited high frequency trading. Okay, so what is it? We have high frequency trading is a type of automated trading strategy that involves submitting and executing a high volume of trades within extremely short time frames, often measured in seconds or even milliseconds. These strategies are typically powered by algorithms and designed to exploit minute price inefficiencies at speed. So what happens if I use HFT? Lucid Trading employs automated risk detection systems to flag HFT activity. If your account is identified as using high frequency trading methods, on the first offense, you will receive a written warning. And then on repeated offenses, all account profits generated from HFT activity will be removed. Your accounts will be closed, and you will be permanently restricted from the use of Lucid Trading services. You may file an appeal if you believe your account was incorrectly flagged. Why is it prohibited? HFT strategies can result in hundreds of orders being placed within minutes, generating an unusually high load on platform infrastructure. Allowing HFT could degrade platform performance, create data instability, and negatively impact the user experience for all traders. To maintain a reliable and equitable trading environment, HFT is strictly prohibited. Okay, now we know that. Let's go on to the next thing. Permitted activities. News trading. Okay, so you can trade the news. You're allowed to trade the news without restriction, and you may enter or exit positions around scheduled or unscheduled news events. Important, news-driven markets are highly volatile and may involve slippage or velocity logic triggers. Sudden price movements during news events may result in slippage, influencing trade execution at unexpected prices, or triggering unique order behaviors due to the velocity logic mechanisms. Traders assume full responsibility for all outcomes when trading during news events. This responsibility emphasizes the necessity for careful planning and risk assessment, particularly during volatile conditions. Okay, what else is permitted? You can scale into trades. You can DCA. So and that stands for, if you're new, dollar cost averaging, meaning you add in as it goes against you. You add in at worse and worse prices, trying to average your price together so that if it moves back in your favor, it's easier to get back into profit or break even. So traders are free to scale into positions, use the dollar cost averaging DCA. Lucid does not impose limits on entry methods. Scaling can serve as an effective risk management measure, allowing traders to adapt positions incrementally to varying market conditions. Note of caution: while scaling is permitted, martingaling, continuously adding to losing positions in hopes of recovery, is strongly discouraged. Martingaling can quickly escalate risk and is not considered a sustainable long-term strategy. Genuine scalping. Genuine scalping is allowed. Short-term entries and exits that reflect realistic execution and market behavior are welcome. Traders must ensure that their activity remains within micro-scalping policy guidelines, and scalping is considered valid as long as trades are taken in good faith and not intended to manipulate fill logic. Automated strategies. Automated trading systems and trade copiers are permitted. All automated activity must comply with Lucid Trading rules, and traders are fully responsible for any software errors, malfunctions, or unintended outcomes. And flipping. Flipping is allowed. Flipping refers to taking a quick in and out of trade for the purpose of meeting a minimum trading day requirement. While we encourage meaningful trading activity, we do not restrict this practice. Again, all these rules, this is great. This is really, really great. Let's go to the next thing here, which is permitted times to trade. This is the last section of the rules, and you can see this has been really awesome so far. There's nothing that's really difficult about any of this. It's the rules are just fantastic. So Lucid Test, Lucid Pro, and Lucid Direct accounts is permitted times to trade. All positions must be closed by 4:45 p.m. Eastern, Monday through Friday. Any open positions will automatically be closed by Lucid Trading at 4:45 Eastern. Important, holding a position past this time does not result in a failed account. Perfect. That's another thing. They can't fail you for this. They're not going to fail you if somehow you didn't get this position closed by the 4:45 p.m. Eastern Standard Time. They will close it for you. If it somehow goes over, you're not going to fail. They're not going to take your account away for this, like other prop firms do, right? So market reopen times. Trading resumes at 6 o'clock p.m. Eastern, Sunday through Thursday. On market holidays with altered closing times, all positions must be closed before the market closes, regardless of the usual 4:45 p.m. cutoff. Lucid Live accounts. Doing trading is allowed in Lucid Live accounts. Traders may hold positions past 4:45 p.m. Eastern and through the overnight maintenance window, provided they meet the overnight margin maintenance requirements. For added risk control, an auto liquidate option can be enabled to automatically close positions before the maintenance window. Auto liquidation settings and other risk configurations are handled during the Lucid Live onboarding process. So if you're in a live account, if you're trading with their money, you're allowed to swing trade and hold overnight as long as you have enough money to meet the margin requirement. So that's also awesome. It's totally awesome. Let's see. So let's go back to our rules. We've got some more things to look at. There is this side, which is referring to the different types of accounts. And then the last part is the live account. So let's look at this. This section is Lucid Test, Lucid Pro, and Lucid Direct. Everything you need to know about our simulated accounts. So what is Lucid Test? A Lucid Test account is a simulated evaluation account used to evaluate traders before they are eligible for funded trading. It replicates live market conditions and is designed to test a trader's strategy execution, risk management and discipline, and consistency over time. So why use Lucid Test? Lucid Test accounts are ideal for practicing and refining new trading strategies, testing risk controls in a realistic but low-risk setting, demonstrating readiness to move into Lucid Pro and eventually Lucid Live. This phase allows traders to prove that they can trade responsibly and profitably under real market conditions without risking personal capital. Evaluation and progress tracking. Your Lucid Test account is monitored through the Lucid dashboard, which tracks compliance with trading rules, risk parameter adherence, and progress towards the required profit target. All evaluations are automated to ensure fairness and transparency. So what comes next? Once you successfully pass the Lucid Test by hitting the profit target, you'll be eligible to upgrade to a Lucid Pro account. Passing the Lucid Test is your first major milestone towards becoming a funded live trader with Lucid. Yeah, it's pretty awesome. It's also the less expensive route, for sure. So let's go to the next article, which is what is Lucid Pro? What is Lucid Pro? The Lucid Pro account is a simulated funded account designed to closely mirror real market conditions without involving actual capital. Trades reflect live market prices and volatility, profits and losses are simulated, and traders can build simulated capital. Strong performance may lead to real money payouts. Lucid Pro is the account traders receive after successfully passing the Lucid Test. It serves as a transitional step between evaluation and live trading, helping traders solidify their skills under near real conditions. Why use Lucid Pro? Lucid Pro accounts are valuable for traders who are preparing to trade with real capital, refining advanced strategies under market pressure, and demonstrating consistency and risk control at a higher level. Lucid's trading long-term goal is to fund qualified traders. Lucid Pro helps determine whether a trader's strategy and mindset are ready for the live environment. Accounts created before July 1st. The amount of simulated profits that can be moved live is uncapped across all Pro accounts. And for accounts created after July 1st, which is everything else now, the amount of simulated profits that can be moved live is capped at $150,000 across all Pro accounts. So how your trading is assessed. Performance in Lucid Pro accounts is reviewed by our risk management team. Assessment focuses on rule adherence, risk management discipline, and the trading consistency over time. Okay, got it. Let's take a look at the next section. What is Lucid Direct? What is Lucid Direct? Okay, so this is the straight to funded option that a lot of people have been looking at. It's a little bit more costly. Let's see what they have to say about this. Lucid Direct is a simulated funded account designed to replicate real market conditions without using actual funds. The key component of Lucid Direct is that traders can skip the evaluation phase, Lucid Test, and begin trading for payouts immediately. So the trades reflect live market activity, the profits and losses are simulated, and performance may qualify for real money payouts. Why use Lucid Direct? Because Lucid Direct is ideal for traders who want to bypass the evaluation step and begin earning potential profits. They're confident in their trading discipline and risk management, and are preparing for transition to trading real capital in a live environment. This account type gives experienced traders a direct path to payout opportunities, provided they follow the rules and demonstrate consistency. How your trading is assessed. Lucid Direct accounts are monitored by Lucid's trading risk management team, who evaluate rule compliance, risk control, and consistency in strategy and performance. Lucid Direct is designed to simulate the pressure and structure of real trading while offering an accelerated track towards live market funding. How do Lucid Pro payouts work? So here's the general requirements. To be eligible for a payout from a Lucid Pro account, you must not violate any trading rules, terms and conditions, or the Lucid Pro account agreement. Payout requests are final once submitted and they cannot be edited or canceled. Okay, now this is a question that we get a lot here when we want to talk about this profit split structure. The traders receive 100% of the first $10,000 in payouts from Lucid traded funding accounts. So that means that the first $10,000 that you make, you're going to receive 100% of that. And then after reaching the $10,000 in total payments, all funded account payouts are split 90 to the trader and 10% profit share to Lucid Trading. So this $10,000 that you can get the 100% of, this is across all accounts. It doesn't mean 10,000 per account. It's just 10,000. Once you've been paid out $10,000 by Lucid, then everything past that is 90-10, which, I mean, come on, it's a great deal. It's a really, really good deal. Now, the payout eligibility criteria. This is important too. So you must meet all of the following criteria for each payout request. These requirements reset after every payout. Okay, so this is each time. The minimum profit on trading days. You must earn at least the minimum requirement profit on 5 separate days during the payout cycle. Okay, important. Things are definitely important. Now, if you have a small account, the $50,000 account, it's only $100 per day. The $100,000 is $150 per day, and the $150,000 is $200 per day. Now, I'm going to tell you right now, I can make $200 a day trading like 1 or 2 MES contracts and 1 MNQ contract. No problem. These minimum profits are so small that it almost isn't even a consideration. However, it is there, and you do have to make that minimum amount at least 5 days of the payout cycle, the payout cycle, in order to be eligible for a payout. Fair enough. Okay. The profit day count resets after each payout. So if you receive a payout, now you have to have 5 days above this threshold. 5 days of minimum profit above this threshold in the next cycle. You have to qualify for this each time you're requesting a payout. Okay, so number 2, the consistency percentage. And we talked about this a little bit earlier, but here it is again reiterated. Your largest single day of profit must be no more than 35% of your total profit during the payout cycle. And the 35% consistency percentage resets after each payout. This ensures that profits that are earned with consistency, not via one unusually large trading day. Let me say that again. This ensures that profits are earned with consistency, not via one unusually large trading day, an outlier. So see the rules section for full details on consistency calculations, which we went over a little bit earlier in the video. This is number 3, which is profit over buffer balance. Okay, to request a payout, your profits must exceed the buffer balance, which acts as a safety net to avoid hitting max loss after a payout. You cannot take a payout from the buffer balance. So the buffer is equal to your initial max loss limit plus $100. So that will vary depending on the size of the account. You can see right here, if we go in, we've got the 50K account right here, and the buffer balance is 52,100. That's because as we learned earlier today, the $50,000 account has a $2,000 max loss limit. So that'd be $2,000 plus $100. So you wind up getting $52,100. Now for the $100,000 account size, it's $103,100 because the initial max loss limit for a $100,000 account is $3,000 plus $100. Perfect. Then for the last one, $150,000 account, loss limit is $4,500 plus 100, so you get $154,600. That's your buffer balance. You have to have that or more to be able to request a withdrawal. And right down here, we have some examples. Okay, so in a 50K account, the balance is 52,800. Okay, the buffer is 52,100. But when we subtract 52,800 minus 52,100, we get $700. You can withdraw $700. Now, if it's a 100K account, the balance is $104,000. This is just an example. Your buffer, as we know from up here, is $103,100. So $104,000 minus $103,100 gives you $900. That's how much you can withdraw. Now, on a 150K account, let's say that you had traded yourself up to 156,000 and you had a buffer of 154,600, just like it says right here. Now, the balance is 156,000. The buffer is 154,600. So 156,000 minus 154,600 gives you $1,400. That's how much you can withdraw. And that's the way the math's done and what the amounts would be that you were eligible. And remember now, we have to do a couple things though. We have to meet the consistency percentage, right? We have to make sure that none of our days are bigger than 35% of the total profit during the payout cycle. And we also have to make sure, based on our account size, that we have at least 5 days that meet these minimum profit target. So let's take a look here in the next section here. It's important. If you take a trade before your payout is processed that drops your balance into the buffer, your request may be denied. Okay, so if you request a payment, sometimes it's best to just wait until they process it before you trade anymore. Okay, so payout minimums and maximums. Minimum payout request, $500. Maximum payout depends on the account size and the payout cycle. So, and it varies by the number of payouts that you've taken. It goes up with each one. 50K account size, you could have the first 1 and 2 numbers, payout numbers of 1 and 2, $1,500. Payout numbers 3 and 4, you can go up to $2,500. Payouts numbers 5 and 6 go up to $3,500. And then the new payout table below goes into effect only for Lucid Pro accounts upgraded from Lucid Test accounts purchased on or after 8/17/25, which will apply to anybody that is watching this who hasn't purchased an account yet. You would be going with this particular set of numbers because this is, if you don't have an account from those previous ones, then this would be it. It would be the chart that you're looking at right here, okay? And it's basically the same thing. Payouts 1 and 2, $1,500. Payouts 1 and 2 for the 100,000 will be 2,000. Payouts 1 and 2 for 150,000 will be 3,000. And then the numbers are all more or less the same. It's a little bit less on payouts 5 and 6 for. It's not that big a deal. It's not something to get yourself too concerned with. You know, work on getting payout 1 and 2. Work on getting payout 3 and 4. And yes, they are capped. This protects them. But if you're consistent, this is fine. And you, by the time that you, let's say you had a 50K account and you did 1,500 for payout 1 and 2, then you have 3 grand. And then for payouts 3 and 4, you did 2,000. So that would be 4,000 plus the 3, that's 7. And then you do payouts 5 and 6, which are 2,500, which would be another $5,000. And now you're up to 12K. I mean, see, we're talking like we're proving consistency, and we're also doing exceptionally well on the amount of money that's coming in. And now we have proved that we have a profitable strategy, and we're developing a relationship with our prop firm that we are now going to move on to probably a live account, right? So let's look at payout timing and processing. There is no fixed payout window, and you may request a payout any day after meeting all eligibility criteria. Once approved, the funds will be deducted from your account within a few minutes, and then the payouts will be dispersed to your payment method within 2 business days. Remember, their average time is 15 minutes once they do this. It's really, really great. And then there's the transition to Lucid Live. And when a trader progresses from Lucid Pro to a Lucid Live account, the simulated profits from your Lucid Pro account are used to calculate your starting Lucid Live balance. There is no hard cap on the amount of transferred live. Starting July 1st, Pro accounts will have a 150,000 total live funding cap across all active accounts, regardless of quantity. Starting July 1st, Pro accounts will have a $150,000 total live funding cap across all active accounts, regardless of quantity. Any capital move live the first time around reduces the available max on subsequent attempts. Okay, so what we're saying is it's $150,000 total. And if you fail in live and then you come back, whatever you transferred from the beginning, that's deducted from that $150,000 mark. You can only bring $150,000 in total over to the live account. So that's basically what we've got here. This is the rules on the Lucid Pro accounts, which remember, you get the Lucid Pro, on the Lucid Pro, you get the Lucid Pro by passing a Lucid Test, right? Okay, so let's look, and there's one more now at the end, the Lucid Direct payouts. And let's go ahead and see here what the general requirements are. So how do Lucid Direct payouts work? The general requirements. To be eligible for a payout from Lucid Direct account, you must not violate any trading rules, terms and conditions, or the Lucid Direct account agreement. Payout requests are final once submitted, and they cannot be edited or canceled. The profit split is the same. Traders receive 100% of the first $10,000 payouts in Lucid traded funding accounts. And after reaching $10,000 in total payments, all funded account payouts are split 90% to the trader and 10% profit share to Lucid Trading. Payout requirements. All the following requirements must be met to qualify for a payout. These conditions reset after every approved payout. Number 1, minimum days traded. You must place at least one trade on 8 separate trading days. A trading day counts if you place at least one trade between 6 p.m. Eastern and 4:45 p.m. Eastern the following day that results in the net profit of at least $1 for that trading day. The trading day counts resets to 0 after each approved payout. The consistency percentage. Your largest single day of profit can be no more than 20% of your total profit during the payout cycle. 20% consistency percentage resets after each payout. And see the rules section for full details on consistency calculations. And we looked at that a little bit earlier in the video. So the payout profit goal, number 3, to be eligible for a payout, you must reach a minimum profit goal during each payout cycle. The profit goal resets to $0 after each approved payout. So with the 50K account, your profit goal is $3,000. The profit goal 2 is $2,500. 2 plus, like 2 and thereafter. And the same, and the $150,000, you have the profit goal. The first one is $9,000. And then the second and subsequent ones are $4,500. Payout minimums and maximums. Minimum payout request, $500. And the maximum payout request depends on the account size and the payout cycles. So it's very similar to the other one, but it's not exactly the same. And then payouts 1 through 3 for the 50K account, you got $2,000. Payouts 4 through 6 are $2,500. And the $150,000 account size, payouts 1 through 3 are $3,000. And then payouts 4 through 6 are $3,500. So payout window. There is no fixed payout window. You may request a payout after any day after meeting all the eligibility criteria. And then once approved, the funds will be deducted from your account within a few minutes. And the payouts will be dispersed to your payment method within 2 business days. Amount moved to Lucid Direct Live. When a trader is moved to Lucid Direct from Lucid Direct to Lucid Live, A portion of their simulated profits will be used to calculate the starting balance on Lucid Live. The maximum amount eligible to be transferred for each Lucid Direct account is the lesser of your total simulated profit in each account or the cap set by the account size. So $50,000 max move to live per account is $5,000, and for the $150,000 the max is $15K. Account maximum move live is a lifetime for a user. Any capital move live the first time around reduces the available max on subsequent attempts. Okay, so that's important. It's a little bit more restricted in the straight to funding than it is if you go through the test process. And I imagine that they've done all the math around this to find out where their risk lies and which one is more risky to them. But these numbers are a little bit more difficult, in my opinion. The straight to funded option, while it is nice, there are some things that are a little bit hard about it. The 20% consistency rule is definitely difficult. It's a little bit, seems a little bit easier on the way that the days are calculated because there's no minimum amount that you have to make, but you do have to do 8 trading days instead, which is different. And then there's a little bit of restriction on how much the payouts are and how much money you can move over to the live account straight from funded. And that sums up the way the payouts work, the way the different simulated accounts work. Let's just jump back real quick and do the last one. Let's read about Lucid Live. So what is Lucid Live? Lucid Live account is a trading account funded with real capital. Traders in Lucid Live accounts operate in the actual futures market, or any profits earned are real and withdrawable. Once you have successfully earned payouts in Lucid Pro or in Lucid Direct, you may become eligible to transition into a Lucid Live account. Why use Lucid Live? Lucid Live accounts are designed to give qualified traders full control, just like they would have a personal brokerage account. Key benefits include the ability to swing trade and hold through multiple sessions, the freedom to withdraw profits as frequently as you desire, customizable risk settings tailored to your trading style, and then Lucid's trading mission is to fund any and support any traders once they've proven they are ready to manage real capital responsibly. So how do we assess your trading? Lucid Trading is committed to helping live traders build long, successful careers. Our risk managers continuously monitor performance for adherence to sound risk management, provide guidance or check-ins as needed to support your success. And Lucid's trading interests are fully aligned with yours. We profit only when our live traders profit. Your success is our success. Okay, let's see. Lucid Live overview. At Lucid Trading, we view Lucid Test, Lucid Pro, and Lucid Direct as stepping stones in a trader's development. These simulated phases are designed to help traders refine their strategies and build initial capital. Once a trader transitions to a Lucid Live account, they are no longer eligible to purchase or upgrade new simulated accounts. However, traders may continue to trade active funded accounts that have not yet been moved live. When do traders get moved to Lucid Live? Traders are moved to Lucid Live account under 2 possible conditions: after completing their final 6 payout in Lucid Pro or Lucid Direct, or at the discretion of Lucid Trading, if risk managers determine a trader is ready to move to live trading before the 6th payout. What's different in Lucid Live? Lucid Live accounts differ significantly from simulated environments in terms of flexibility and structure. Swing trading. Traders may hold position across sessions provided they meet margin maintenance requirements. For those who prefer stricter risk automation, Lucid can configure automatic liquidation before the maintenance window during onboarding. Risk settings. Traders in Lucid Live accounts set their own risk parameters, as long as they are supported by our broker. Lucid enforces only one firm rule: a 20% daily loss limit. Traders are strongly encouraged to configure a lower daily loss limit for added protection. Margin-based contract limits. In simulated accounts, max position size is fixed regardless of account performance. But in Lucid Live, position size is margin-based, meaning it scales with a trader's account balance. Lucid Live is structured to mirror real trading conditions while maintaining essential guardrails. Traders are trusted to manage their own risk in a professional, accountable environment. And right here is a little picture that shows us what the Lucid Live trader path is. And then we have Lucid Live, real capital, real futures markets. You have the ability to swing. You can take daily payouts from your profits. And then you can hit performance bonuses as well with 10 trading days, 20 trading days, 30 trading days with $500 in profit. And 30% of this money will then be held in escrow. And if you can hit all the bonuses, they'll release all of it. You know, so you're trading, you're swing trading, and then if we move into the drawdown liquidation, the remaining escrow funds are used to create the Lucid Escrow Pro account. So no additional cost to the trader. You can earn payouts, hit benchmarks, rebuild the confidence, and then return to Lucid Live. This is really interesting, and we're going to read a little bit more about it here in just a second. So let's go take a look. Lucid Escrow System. How does Lucid Escrow work? When a trader transitions to a Lucid Live account, all simulated profits from Lucid Pro and Lucid Direct accounts are consolidated and split into two portions. 70% of the profits are allocated to the trader's Lucid Live account with real trading capital. And then 30% is held in escrow and released gradually as performance benchmarks are met. Escrow is unlocked in 3 stages as the trader completes profitable days in their Lucid Live account. First bonus is a 10 trading days with profits of $500 or more. Second bonus is defined by 20 trading days with profits of $500 or more. And then the third bonus is 30 trading days with profits of $500 or more. And each bonus is 1/3 of the escrow amount and becomes available once that milestone is reached. So what is Lucid Escrow account? What is it? If a trader's Lucid Live account is liquidated due to a drawdown, the unused escrow balance is moved into a Lucid Escrow account. The Lucid Escrow account is a simulated trading account. It offers a second chance to requalify for Lucid Live. Starting balance equals the remaining escrow from the liquidated Lucid Live account. And while trading in a Lucid Escrow account, traders can request payouts based on their performance. You can still get paid while you're in the escrow account. It's almost like a buffer, like I'm in the live account. I started drawing down. Things went really bad. They had set aside a little bit of money to see if you can still stay, and requalify. You can still get payments, but requalify for the live account. So while trading in a Lucid Escrow account, traders can request payouts based on their performance. For every 10 trading days with profits of $500 or more, a payout of up to $2,500 may be requested. So if you're still profitable and you're actually pulling money in, you can still take a little bit out while you're requalifying for the Lucid Live account. How do I move back to Lucid Live? And to return to Lucid Live from a Lucid Escrow account, you must complete 20 trading days and each have a profit of $500 or more. So once that milestone is achieved, you may be eligible to return to the live trading environment. So a portion of the escrow amount will be again held, with the specific amounts determined by Lucid's risk team on a case-by-case basis. And here's the same thing of the same picture where we just saw about the 70% Lucid Live and 30% held in escrow. I really like this. This is a way you can keep yourself alive. It really does show like you don't have, just because you get liquidated in the live account, it doesn't mean that you failed. You can still keep going. And that's a really nice little benefit. Okay, so let's look at Lucid Live account payouts. You've got a live profit split going on. So traders in Lucid Live accounts receive 80% of all profits, with the remaining 20% retained by Lucid Trading. This 80-20 split applies to all payouts made from a live account. Now, you can request payouts daily. So payouts from Lucid Live accounts can be requested on any day starting from day 1. There are no targets, profit minimums, or trading day requirements. Traders may request payouts from net profits, their current account balance, or even on days when a loss occurred. Lucid Live is designed to give traders full autonomy over their capital management. Payouts from Lucid Live account balance. Lucid Trading believes flexibility supports long-term performance. That's why Lucid Live traders are allowed to withdraw funds directly from their account balance, not just from accumulated profit. However, it's important to maintain sufficient capital in your account to continue trading. Traders who choose to withdraw their entire balance or nearly all of it are permitted to do so, must first consult with Lucid's trading risk management team. This ensures traders understand the implications of their account liquidation. Okay, let's look at Lucid Live account liquidation. Overview. Trading involves risk, and even experienced traders can go through extended drawdowns. If your Lucid Live account is liquidated due to loss, it does not mark the end of your journey with Lucid Trading. We've designed a recovery process to help traders bounce back through the Lucid Escrow system. First, liquidation. If your first Lucid Live account is liquidated, you'll be automatically transitioned to a Lucid Escrow account. The Lucid Escrow account gives you a second opportunity to qualify for a live trading. Your starting balance in Lucid Escrow will equal the remaining escrow amount held when your Lucid Live account was liquidated. Refer to the Lucid Escrow system page for the criteria to return to live trading from escrow. Now, your second liquidation. If your second Lucid Live account is also liquidated due to drawdown, your case will be reviewed by the Lucid Trading risk management team, and re-entry to Lucid Live will be considered on a case-by-case basis. Lucid Trading is committed to supporting long-term traders while upholding the standards of responsible risk management. They got the last section here, which is Lucid Live Program, the new structure. Lucid's Trading revamped Lucid Live program is designed to reward long-term consistent performance while protecting trader flexibility and firm capital. The new system supports a path to significant live trading capital, gradual scaling with firm matched funds, and a second chance safety net if the first live account is liquidated. Eligibility, account status. Now, for the people who've purchased or reset on or before 8/22/2025, it was a few months back, you got to choose between the old or new structure. But if you've purchased an account after 8/23/2025, which is everybody now watching these videos with us, right? Then the new Lucid Live structure only. Initial capital on day one. Here's the detail. Capital move live. Description. Lucid Pro and Lucid Direct move to live caps remain unchanged. Okay. Day one deposit. Up to $30,000 in real capital deposit into the trader's Lucid Live account. Immediate withdrawals allowed. May take payouts from day one from the $30,000. The remaining sim capital. Any remaining eligible simulated capital is placed in the trader escrow pool. Remember the safety net. And then the Lucid bonus pool. Lucid contributes a 50% match of all the trader escrow pool in the bonus system. So here's the unlocking escrow and bonus capital. Make 5, take 5. For every $5,000 in live trading profit, traders unlock matching capital from escrow and bonuses. So if you hit $5,000, you get $5,000 of your escrow released, you get $2,500 of bonus, and now you have $7,500 additional that's added to your account. So this is awesome because you can just start scaling like crazy if you're profitable. At $10,000, you'll release $10,000 in escrow, $5,000 in bonus. That'll give you $15,000 in addition to the 10 that you just earned added to your account. Bam! That's awesome. Awesome. Live profit earned $15,000, which will release $15,000 plus a $7,500 bonus. So you get $22,500 added to your account. Bam! Come on, man. So here's the withdrawal rules. Initial $30,000 deposit, and then you can immediately withdrawable upon live funding. So then you have your trader escrow and your bonuses, which is withdrawable only after it's released to the brokerage account and after 60 days have passed since account opening, meaning you have to keep the account for 2 months. Unreleased escrow and a bonus cannot be withdrawn unless unlocked through your live profits, which we just covered in that last section right there. Now, if you blow your Lucid Live account, safety net account minus $10,000 simulated balance to demonstrate positive expectancy. Details, no payouts from this account. Simulated profits earned do not get added to live. Then you hit your targets in the safety net account. Earn at least $10,000 in simulated safety net, trade for at least 10 days, maintain a profit factor of at least 1.5 or greater. Then you can return to live. Upon success, trader is refunded with $15,000 in live capital. And then your re-earning escrow bonus, once consistent again, previously unearned escrow and bonus capital can begin unlocking. They give you a second chance. A little tough to get back in. You have to have your profit factor above 1.5, earn at least $10,000. It's not the end of the world. It's totally doable, especially if you really are profitable. You can do this. The $15,000 contributed in the return to live is deducted from the trader's escrow. If the trader has no capital in the trader escrow pool, they do not get a safety net account. If they have less than $15,000 in the trader escrow pool, that is what they'll return to live with. And then here's the summary. The new Lucid Live model emphasizes merit-based scaling, capital flexibility, and longer-term trader development. Traders can grow their capital by providing consistent live performance and taking advantage of match bonus system to multiply their earnings with built-in protection and the first attempt doesn't go as planned. So here's the transition to Lucid Live. Here's an example. You have $150,000 that moves into live, our sim profits. So then you get $30,000 into the live account, and then $120,000 goes into that escrow. Make 5, take 5. And then at each $5,000 that you earn, you get $5,000 from your escrow plus a 2.5K deposited from the bonus. And the money starts unlocking like crazy. You're like earning double, a little bit more than double for the money that you're earning on it. And it really is like advantageous to continue to try to put profits in the account and not blow up, show that you can manage the risk. And then we also have this one. Here's the an example. If you had 75K, where you'll get 30K in the brokerage and then 45K in the trader escrow. And the same thing, we're make 5, take 5. And then if we look at this one, this last example, you have 30K in sim profit. So you only get 30K into the brokerage account and there are no bonuses at this point. And this is where you are starting to, if you get refunded, etc. So here's the Lucid safety net, which is a second chance at live. The trader draws down the initial Lucid live account. And you got your safety account, simulated balance. Then you got to demonstrate positive expectancy, hit a 10K profit target with a profit factor of 1.5 and trade for at least 10 days. Move back to Lucid Live with a 15K balance, make 5K in live to resume the bonus plan and unlock your escrow on whatever you have left. So we're talking like, it's awesome. This is so awesome. They don't punish you for getting to live. In fact, they give you massive bonuses if you can do well, because they actually are looking for real traders that have profitable strategies to trade with their capital. And then they will double and reward you in a big way. So in any case, that sums up this video. I hope that helps you guys. I'm a huge fan. My final thoughts on this prop firm are this. This prop firm is awesome. If in my particular case, I'm going to be going for the test accounts and qualify that then turn into the Lucid Pro account, because I think that the rules for payouts under Lucid Pro are better than the rules for payouts under Lucid Direct. I'm not saying don't do Lucid Direct. Lucid Direct's fine. It's a way that you can pass the evaluation and not have to worry about going through that testing process. But I think it's a little stricter and a little more restrictive in moving to live. So those are my thoughts on this. Let me know how you guys feel down in the comments about this. I'm on board. I love the only red flag with Lucid. The only red flag with Lucid is that it's so good, it might not be true. However, they've already paid out $5 million. They're doing exceptionally well for the amount of time that they've been around. There's credibility in their management team. I can go more into that in another video, but I am on board with these guys. I think they're great. I think that you should use them too. Use my link in the description. Use code RTF for the best discount, and I hope to see you guys there. Thank you so much for your time. We'll see you on the next one.